Good morning, traders. Matt Weller here, Global Head of Research with Forex.com. Today is Friday, the 14th of August, 2026, and we've now had our third consecutive disappointing U.S. economic report of the week. In today's video, I'll break down everything that you need to know ahead of today's U.S. session. Let's get right into it. The report I'm referring to, of course, is the U.S. retail sales report. Perhaps not a top-tier report in the current environment, but certainly adds to the evidence that we saw a U.S. economic slowdown in July. Retail sales contracted by 0.6% month over month versus an expected 0.1% gain. And even the core retail sales report, which filters out some of the more volatile elements and is seen as more indicative of the underlying trend, that fell by 0.3% month over month versus a gain of 0.2% expected. This, of course, comes on the back of disappointing PPI and CPI numbers and perhaps validates the FOMC's decision to leave interest rates unchanged last month, though again, traders might be considering some of the one-off effects. For example, Amazon Prime Day came in June this year. It was July the previous year. Perhaps we saw that contribute to some of the slowdown. Nonetheless, here, certainly traders have their antennas up for a potential slowdown in the world's largest economy. As for markets, oil and gold are edging higher. U.S. indices were mixed when I made this. I believe they're actually ticking higher now after this retail sales report, and the U.S. dollar is the world's weakest major currency so far today. Put a brief note here that the Eurozone GDP report was confirmed at 0.4% in the second quarter. Not the most timely data, but that'll tie into today's chart of the day later. And then looking ahead, probably the last notable economic release of the week will be the U of M consumer sentiment report at 10 o'clock Eastern time. That's expected to come in at 54.7 on the headline. The key factor to watch will be expected inflation, which is anticipated at 4.2%. As you might have guessed by now, today's chart of the day is the world's most traded currency pair, the euro versus the US dollar, which you can see is edging higher and crucially is above that 115 level. This is a 4-hour chart where we can see what I would call a high base formation so far this week, and even dating back a bit to last week after a big rally in late July into early August. We've been moving sideways in the mid 115s after this period of low volatility and consolidation. You can see the 14-period RSI has very gradually corrected from overbought territory, potentially setting the stage for another leg higher. If we do indeed get a breakout in euro dollar here, the next level to watch to the top side might be some of those previous highs you can see in June, just a bit above 116, and a more important resistance level sits up at 116.70, which represents the high from late May and early June. Certainly some upside potential here in euro dollar, especially on the back of the weak economic data we've seen out of the US this week. That is today's video. Thank you for carving a couple minutes out of your day to watch today and throughout this week. If I can ask just one favor though, before you go, please do drop a like on this video. It's a great free way to show your support that helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at Forex.com for more videos like this. Thanks again. Best of luck with your trading today and have a great weekend.